Hey, Steve and Jamie, what's going on?
What's up there, Scott? Steve, how's it
Hello.
going?
Happy Monday. It's going.
Indeed, what a Monday it was. And, Scott putting a little pressure on me. This is the last office hours. Oh, no. Ooh, but I've got some good stuff to show you guys. Got some new features with Brokerage Plus that I'll be able to give you guys a peek of today. And boy, what a crazy Monday it turned out to be. We'll get into that in just a momento here. Before we do that, want to make the lawyers happy and just read the disclaimer here. Of course, everybody's probably heard it a few times, but if you're new, listen up, especially careful. Just want to share the fact that everything we share with you guys here, all information is for educational purposes only. Please do not misconstrue what we convey to you as a recommendation to buy or sell anything. If you do need investment advice, what to do, when to do it, all that good stuff, please seek out a registered investment advisor or another licensed individual like a Series 7 stockbroker that can give you that type of information nice and legal-like. So once again, informational, educational purposes only for these webinars. All right. So before we get going here, there's always a fair amount of new people coming into these webinars. So you regular people, bear with us here real quick while we tell everybody about the community that we fostered around the award-winning technology. The ones you're seeing up here right now are the 5 p.m. Eastern webinars, with the exception of Barry's Trading Room up here in the upper left. Moderated by Mr. Barry Anderson himself. Been doing it for a number of years now and does it quite well. So if you've not been taking advantage of the free trading room that we have here, then you might want to get set up for that. Usually anywhere between 400 and 600 people in that room. Barry does an excellent job at keeping the crowd sane and showcasing his technology, or the technology of trade ideas, and how he uses it in his daily routine. So he'll open the room up 30 minutes before the open, so get on in there. Of course, today you get myself and Steve. Steve's going to take the helm tomorrow for the trade of the week. Andy Lindloff's going to ride shotgun with him. Wednesdays, something special. We bring in the CEO and founder, Dan Merkin, along with our CTO, Brad Williams, always interesting. And Andy's going to round out the 5 p.m. Eastern webinars on Thursdays. I ride shotgun with him. Then, of course, the ever-popular Friday support session will continue on as always, starting up at 11 a.m. Eastern Time, and assuming the crowd stays with us, we'll go for the full 3 hours. Been getting record crowds in the Friday support session as well, so come one, come all. Now, TI University, something that we started up not too long ago once we discontinued our private one-on-ones due to just the client base getting so big. We've got beginners 101 through 401. Obviously, beginners 101 for the fresh, wet behind the ears people that need to learn what an alert window is versus a top list window, general functionality, and all that good stuff. We do recommend that you take these in order because you'll need what you learn in 101 to make sense out of 201, 301, so forth and so on. So this is a great place to get yourself familiar, get yourself over that learning curve as quickly as possible. And of course, that's all going to be dependent upon how much education you take in and how much time you spend with the product. But the TI University, great places to start. So if you haven't signed up for those yet, go ahead and get in there, get on the list, start getting those invites. Now we've updated our slides. So, we used to show a different slide, but Scott has updated these, and it really just gives you a yearly view of how people are responding to our AI modules. 2016, the very first one, Holly AI, brought on the other two. Well, it was kind of a gap in there between the first one and 2.0, and then Neo was added to the mix as well. So obviously the numbers speak for themselves. The AI was introduced, and our client base just keeps on growing, record year this year, and looking like we've got maximum speed moving into the new year, along with a lot of new functionality. The ability to automate Holly being one of those, hopefully targeted for the end of January 2019. So yet another advanced functionality coming online. Lots of people excited about that, including myself. All right, so here we are to the itinerary for today. And boy, Steve, crazy action in the S&P and the Qs and the Dow and all that good stuff. So if you're ready to show everybody the carnage, I think
Sure.
I'll pass it over to you.
And I apologize for the heavy breathing and sighing earlier. I was
That's
working
okay.
I was working on some art over here and made a couple mistakes on my version of the Scream for illustrating what happened today.
Very
I had
nice.
to hit the eraser. Did not realize I was not on mute. Apologize. All right, so welcome to my screen. Let me grab there we go. All right, so let's turn that off. We all know this was the action today. Dump. There we go. Let's stretch out the old S&P. Lots to talk about once again. The old bouncing ball seems to have found its way through the crack in the ice. So we talked a lot about the possibilities, and that little bouncing ball right there was the most interesting part to me back here. Kind of last week, all we really had to go on was this big spike off of the reversal candle, and a great visual example for you guys to imprint on when we talk about like weak bounces into the pocket. Okay, so the pocket is these moving averages starting to curl back over again out of this range. Remember, they were twisted and didn't really tell us much back here, but as they start to corral, which is exactly what they did here, they corralled that price, kept a lid on it. That bounce that was attempted last week, Monday, Tuesday, Wednesday, Thursday, Friday, we finished right down here. Very weak attempt. I mean, it almost felt like a foregone conclusion that we were, going to be going through this today. And that being said, the trade of the week was very defensive in posture. We'll talk a lot more about that tomorrow night, but the trade of the week this week was GDX. GDX was really the only thing that was holding up in the face of that bounce last week. And look at the exact opposite here. Let's turn those off. Moving averages are fanning out, supporting the price, pushing it higher. All right, so the last 3 out of 4 trade of the weeks were all very defensive in nature because of the way the market's been behaving in the backdrop. We did SDSs one week, cash as a position another week, not a symbol, Steve, and then this week GDX because of the relative strength. I'll come back to some of those sectors in a moment. But continuing on here with the S&P, a lot of damage was done today. Again, this reversal candle on Monday could very well have developed into something, but Tuesday, Wednesday, and Thursday just showed the anemic attempt, dead cat bounce, whatever you want to call it, oversold bounce. And so that brings us into tomorrow. There's an old axiom in the Trader's Almanac called Turnaround Tuesday. And we're setting up for the perfect example of that scenario. A weak close on Friday, ending the charts looking really weak. Follow through fear into Monday. Selling selling into Monday. And how close did we get to our lows there? I mean, we finished off our lows. Pretty good attempt at the end. But boy, a lot of that was probably market making, squaring up at the end of the day. I see your comment here. It's been a wild week, and indeed, Gary. So what could very well happen tomorrow? I'm not predicting it. I'm just saying watch out for this scenario because Friday and Monday are shaping up for it. So follow through selling in fear from today. Big spike in volume, leading to a capitulation. If you guys haven't not been around a live monitor, a live screen with live prices during a capitulation, you'll know when you see it because it's crazy. It is a washout of fear. We haven't really seen that. We've seen orderly selling, especially when we look at the price action last week into the pocket here. Orderly selling, but a little bit of pickup in action and speed today and velocity, as well as volume. So back to the axiom of the Trader's Almanac, turnaround Tuesday, we could see a capitulation and horrible selling in the first few hours tomorrow. If there's a V bottom and buyers step in and that V bottom holds for 30 minutes and starts to build on that, that could be a short-term oversold bounce. I don't know where it leads. That's 5 chess pieces down the board, but price action is price action. We've had a pretty big move from not too far away. This was just the beginning of December back up here at these resistance levels. Bounce, consolidation, and then the real true colors continue in the same direction. Well, again, tomorrow could be a nice oversold opportunity for those that are nimble and have quick accounts and want to trade that kind of stuff. it could be a turnaround Tuesday. I'm not predicting it. I'm just saying watch out for it because everything is kind of setting up as we go into that Tuesday with panic and volatility and selling pressure. Over in the NASDAQ, pretty much one and the same. Held up a little better. Matter of fact, it's showing a little bit of signs of an attempt to close above that last prior low. So we have, again, back to the S&P, a lower low for sure in the S&P. And why is that? Well, I'm going to go out on a limb and say it's the banks. Goldman Sachs is not a bank, but they were proclaimed a bank in 2008, but whatever. That's pretty darn ugly. I mean, look at these moving averages fanned out. Here's our bounce last week, right? Goldman didn't even bounce. Goldman just went sideways and waited for that scary moving average, the 10 period, to come down and catch it. So it's the financials that are killing this market and not helping at all for sure. Going back to the Deutsche Bank, been talking about this for a couple of weeks now as a possible leader to the downside, and there it is. These are all-time lows back here for the biggest European bank, Deutsche Bank, for derivatives. And here's another great example of a couple things, two things. One, oversold bounces. There's an oversold bounce right there. Rallies in down markets can be pretty severe once the oversold boat gets too crowded on one side of the life raft. Everybody runs to the other, but look how short-lived it is. And the second point I'm going to make, look at how simple that moving average is, the 10-period moving average. I mean, we couldn't even close above it that day on the big oversold bounce day. And then for the remaining 3 days, it's just been corralled and kept a lid on price. So when on a daily chart and an intraday chart, when price action is in motion, I want to keep it as simple as possible. And speaking of, let's go back to today's price action. Here's Friday, moving down hard on hard selling, never even once closed above that declining 10 period. This is Friday's action. Got ahead of ourselves this morning, and then here was the moment of truth right here for the bulls as they bounced above that moving average that held midday, chopped about an hour and a half sideways. They had every opportunity to take a opportunity to bounce there, but they didn't. The price went lower, and look, that moving average continued to corral and keep a lid on price throughout the rest of the day. So once again, the 10-period simple moving average is so simple, anybody can use it. And the nice thing about it is it keeps things from not getting too cluttered and too out of the way. Before I hand it back over to Jamie, just another quick notion on the trade of the week, which is a mandate to kind of go long and find things to go long, which is going to be hard if this market continues. But this week I felt like we dodged a bullet a little bit. There's really only so many places you could hide in this market, and there's only a couple places we can hide in this market, and you can see the sector board right here gives us a pretty good clue. And today, gold miners, let's zoom out here a little bit, was the only place where you could hide. The rest of the day, pretty much everything red. Gold doesn't count because that's the underlying commodity. But let's just go through this giant list I have of sectors here and see if we can find anything constructive. By constructive, I mean moving from lower left into upper right. All right, gold miners fit that bill. Gold fits that bill. Treasuries fit that bill. And by the way, today I told Jamie and Andy I logged into the 401k account and went heavily weighted into treasuries today. Based solely pretty much on this, and I've been thinking about it, but this chart right here tells the story. These treasuries are holding above the moving average. If this was a stock, it'd be a buy all day long. This thing wants to build a base, move higher, and go higher. So these are the treasuries. So a little bit of personal info. I definitely beefed up the treasury weighting in the old 401k. Continuing on, so far all we've had as a strong sector is the gold miners and the treasuries. Let's go through them one by one. Silver, steel, nope. Going lower. Financials, hideous. Home builders, nope. Banks, nope. More banks, nope. Semis, nope. Oil, hell no. Energy, hell no. Dow, airlines giving up. Brokers, feeling the pain. Brokers, I'm sorry, this is biotech. NASDAQ, healthcare, spiders, technology in general, agriculture, retail, solar. Solar's not at lows, but that's about the best thing I've seen so far since the last 20. Russell 2000 is practically in bear market territory now, down 20%. Oil looks like it wants to go another leg lower. Chinese stocks don't look good. There's nothing in here, guys, that looks constructive except for gold miners, in my opinion, and the treasuries. So there's major caution flags up right now. I think maybe the best the market could hope for tomorrow would be maybe a nice volatile reversal turnaround Tuesday that brings in some buyers and resets the stage, so to speak. Everybody that's been sitting there saying, I'm in cash, I'm waiting for my buying opportunity. Well, there might be some attractive people to step in if we do get a nice washout. But I think from now until that point, whenever it is, we've got some more downside in store for us. And that's it, Jamie.
Cool. Thank you very much, Steve. Yeah, as one of the attendees was saying, there's a different saying for every day of the week. So it could be turnaround Tuesday or washout Wednesday. We'll just have to wait and see. All right, you got eyes back on my screen?
I do.
All right, perfect. All right, ladies and gentlemen, we've got quite a few things to talk about here. As Steve was pointing out, not a lot of quarter out there for anything except for some of the precious metals. Great call on the trade of the week. So here we are, ladies and gentlemen, and what you're looking at right here are my compare count readings after the first 15 minutes today. And boy, when I saw these 71% downside readings, I'm like, whoo, those are pretty large. I mean, because just to reiterate here, typically when I glance at this window after the first 15 minutes of the market, looking to see a bias. Usually it's around somewhere between 55, 56, or 53%, under 55% being As we approach 55% and get over it, start creeping towards 60%, eyes really and ears perk up. But boy, very seldomly do we see one side or the other pegged at 70%. Now, in days of past, did see a couple of these days to the green side, but now we're starting to see them to the red. And of course, being in this most pivotal spot in the S&P, you're like, whoa, wow, is this an accurate predictor for today? Well, and of course, it was in the end, but kind of circling back around to right here, I mean, max pain mode, right? If you were short right on the open today, what were you handed right off the bat? Well, a little regression back up here to the prior day's close before we finally rolled over and set those new lows. So no matter how you slice it or dice it, some of the most tough terrain when we're down in this area to trade through. Now, having said that, each and every session is unique in its own capacity, right? So we've been very used to seeing the Hollies do pretty well over the past, with the exception of coming into last week. Holly was doing her thing, being very positive most of the time. But boy, last week, temperature sure changed, and coming into today, whereas Holly did have quite an assortment of shorts, we can see over here from the totals, finishing red on risk on mode on 2.0 and Neo, with the exception of the old gray mare, Holly 1.0, pretty much just a little bit worse than flat in risk off mode. Now, Holly and Brokerage Plus, okay? Now, I've got a couple of screenshots to show you guys today. And what you're going to see here are screenshots from Dan, the CEO. He's in the midst, and him and Brad have been testing Brokerage Plus, but not Brokerage Plus per se, but the new automation format for Holly, which is going to see, it's going to be very similar to the Brokerage Plus functionality, but it's going to have a whole different interface, right? So Dan's been testing that, Brad's been testing that, and what I'm about to show you today, right here, and I think I can make this just a little bit bigger. Well, hopefully everybody can see. Let me just kind of maximize the screen right there. Now, what you see right here is a live blotter taken not too far from the close from Dan, using Brokerage Plus and the Holly automation part of it. Now, what I'd like to direct your attention to is every position is short. But we all know Holly wasn't just spitting out shorts today. She was spitting out longs and shorts equally. Not equally, but a nice amount of longs and a few shorts. Not near as many shorts as longs today. Now, what you might notice as well is the strategy names over here. And you're like, well, the 5-day bounce, that's a long strategy. Mighty Mouse is a long strategy. Well, just about every one of these was a long strategy, with the exception of slippery slope. And we can see Dan's got a couple of discretionary positions that he's been trading as well. But notice a lot of these long plays are short. Okay. And, Dan and I had a conversation. I'm like, well, what's your methodology here? And it took me a few minutes to absorb all the information. But then it kind of dawned on me, everything in cycles, right? So as I do from time to time, I'm going to put us all in the Wayback Machine and talk about when Dan and I first started trading in Austin, when we were kind of just barely figuring out what we were doing. Still weren't profitable yet. And of course, myself, Steve, Andy, Sean, all of us old dudes, including Brad, even though he's a little bit older. But we all started in the SOS era, right? That was our edge. But I distinctly remember Dan and I being about a month old in the Austin, Texas shop. And we're still trying to find our feet. We got some winning days and some losing days, just enough to keep us coming back, but we're struggling. So I don't know if the firm Daytech rings a bell with any of you guys. One of the older SOS firms out there, probably number 2 or 3 to get started. But anyway, Daytech got bought out a very long time ago, but they had some groundbreaking technology. Well, they would send one of their bigger traders, I think his name was Omar at the time, to come down and teach us certain techniques, right? And one of the techniques that he would throw out there is like, look, guys, if you think the market's got some upside lift to it, right? Well, we had 2 systems, SOS, and we could see the level 2, and then we had another system called SelectNet. So if you saw a whole page of, say, offers on stock XYZ, and they were all lined up at 50, lots of liquidity there, you could say, throw out an offer, sell it at 50, and see if anybody hits it on SelectNet. There was plenty of liquidity there, but all of a sudden, boom, somebody buys it from you at 50, so you can just flat out of the trade. And you're like, well, throw up another offer, see if they hit that. Boom, they'd hit it. So what are you doing? You're technically trading, but you're just throwing it out there and see if there's a buyer somewhere out there. Then you could just flat the trade. But you're really extracting information, right? Okay, every time I throw this out there, somebody buys it. It's not even on this system. What does that tell me? That tells me they're accumulating the stock. Therefore, it's got a good chance of going up. So as Dan lets Holly pile into the positions today, and if we just kind of pull the S&P chart back over here, just to kind of help you visualize this, we pop back up here to, prior close areas, pre-market areas, or post-market from the prior day. And what's happening on the blotter? Well, the longs aren't really going up that much. We're getting a big lift here, but yet maybe 40% of the blotter is long, and they're not getting any play. That means something, okay? Because this isn't a huge move, but coming from down here when you're stacked in a big blotter and you're long and short and you get all this movement up here and the longs barely react, that's telling us something. So at that point in time, Dan proceeds to use the enhanced functionality that we've built in here, which, keep in mind, Brokerage Plus, Holly, this functionality goes underrated a lot, but this was the perfect day to put this into play. So as that move happens and those longs aren't giving any upside or maybe just minimal, Dan starts eyeballing the charts and going, okay, reverse, 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 changing those longs into shorts. Now you couple that with the readings that we had here today, all right, and you couple that with the move up and all the longs on the blotter barely reacting, what is that telling us? Those are pretty good tells that, there might be a pretty good undertow later in the day. And of course, every day is different, but today Dan seemed to hit it pretty much on the head, and he was also pointing out the plus minus positive change column right here, which still kind of flies under the radar. But he got into the mode where he's like, on those reversals, what I noticed today is I never got out of the money more than 20 cents. And on some of them, I had to go back and forth a few times until I really got a feel for it, all right? Now, each and every day is a little bit different, and maximum pain, because so we're right on the short, but we had to sit this. So the bottom line is this: we can try to apply scientific methodology to the market via statistics or any other scientific model that we attempt to apply, but we all know that it's not just straight up simple science or math, because if it was like that, all we'd have to do is run our calculations, place our bets, collect our money at the end of the day. As Steve likes to say all the time, trading is subjective. Even when you're bringing advanced models like this into the equation, there's a certain element of unknown to the market. And as we're absorbing all of this information, hopefully what I just laid out to you in the scenario on what made Dan flip a lot of these positions makes sense. Hey, we had a good amount of longs on the blotter. Market ticked up to, previous closings. We didn't get any play out of it. Therefore, based on what I saw in my compare count readings and some of the other undertows, yeah, might make sense to start flipping these things. And as you can see, it worked out pretty well for him today. Now, this was shortly before the close, and then this was after the market had closed. Pegs out of everything that he wants to be rid of. As you can see, he's keeping some positions here, and we can see that these were all Holly AI generated ideas that he's decided to hold over into the next open. All right. So, the ways that you can use this technology, the ways that you can use the flow of information and how to string it all together, I mean, the possibilities are limitless, and everybody has different viewpoints. But what we discussed today, Dan and I, and what I'm trying to pass on to you guys makes a lot of sense. And the fact that we're creating this new technology with these, flatten, half, double, limit out all my longs, limit out all my shorts, we're simply making it easier to make these types of moves, whereas in the past, hey, if I want to close this out, I have to click buy or sell. I have to go in there and eyeball it. I have to execute the opposite way. I have to make sure the stop loss is put in. Well, not anymore. All you have to do is hit the reverse button. All of that stuff is done for you. So I just wanted to share that little bit of development adventure with you guys and show you that, hey, even though the Hollies showed up, and barely put on, a show today, and we're down slightly, the opportunity that exists within that data set is vast, right? And the more time that we spend with this technology, and of course, we first have to release it, but just kind of wanted to give you guys a peek under the hood at how the software is being tested and how it's being used quite effectively by, none other than the CEO and founder of the company, Dan, risking his own money. So, walk the walk, talk the talk. Here it is. So more to come on this in the future, but just wanted to give you guys a peek under the hood at how the testing was going. So more to come on that soon. Okay, now, keeping with tradition, there were a few trades today on a risk-on basis that we might have been able to take advantage of here. EXPD is a pretty obvious one here. Holly, and by the way, just in case anybody's wondering what I'm looking at here, I've got my Holly blotters for each module up right here: Holly Grail, Holly 2.0, and Holly Neo. All right. So risk on is simply looking at risk off, which is Holly obeying her rule set. Risk on, Holly simply holding the position indefinitely. Of course, this price is being marked to the close down here. So not quite, what do we got, 49 cents in there between 14 and 63. This one, not too big of a stretch. We get a nice entry signal right here from Holly, blue line corresponding, and then pretty much the movement that we would like. Down, it's a short, right? And by the way, speaking about short trading, right? Hopefully, most of you out there have already started dabbling in the short pool, not just going long, but trying some short trades. Of course, I could harken back to this date right here. And those of you who have been listening to the podcast, you heard Dan way back here talking about Red October, right? If you attended our TI Summit or you watched the TI Summit on the rebroadcast, you heard one of our speakers, Mr. J.C. Parrott's, talking about how things have changed, and before how a big downturn wasn't really even on the table from a technical perspective. And during, it just happened to coincide with our summit, he started talking about, well, can't say it's going to happen, but it's definitely on the table now. It's definitely a possibility. And of course, what has happened since that point in time. So this is a theme that has been reiterated over and over again, and hopefully those of you who have been listening and attending have been able to capitalize on that. Also, too, the ebook, which we'll kind of cover here on the way out, tell you how to get it if you haven't got it. Man, that thing has literally been golden here lately. Whether you're using one of my simple range break techniques, Steve or Andy's, instead of buy the dip, we sell the rip. 4 different people in there showcasing these short techniques. So, if you haven't downloaded the ebook, do that as well, and we'll show you how to get that before the webinar is done. And of course, we'll get to some of those setups from my section as well. But as far as using risk on the EXPD, not exactly a big brain teaser here. We get movement down initially, always good. No wiggles, no attempts at a stop out. And of course, right here we can see this is Holly's time spent in the trade in risk off mode. So we see Holly getting out. It's been a nice downturn thus far. Doesn't look like it's about to turn anytime soon, so we can easily make the decision to either keep the whole lot and accept more risk in hopes for more returns, or maybe do the old 50-50 dance, which is a great way to get used to going risk off, risk on a stock by stock basis. Because even though a lot of people think you have to pick risk on or risk off to start the day, it's better addressed on a trade by trade basis. So we could have stayed in the trade here and made somewhere between 14 and 63 cents, either on the whole lot or the second lot. So it looks like the questions panel is pretty static there. I guess that means everybody's content for now. All right, LPLA. Another good example of a little bit of risk on money being left on the table here. The difference between 23 and 84 cents here. So what do we have? About 61 cents spread between risk off and risk on. Holly making a pretty decent entry here. We'd come down from the tops. She gets the short on right here. But hey, always like to see that trade stay below that entry line as soon as possible, whereas sometimes we see them ebb back and forth in and out through that line. The prior trade and this trade, boom, just straight down as soon as we put the trade on, and just a nice little staircase down. Looks very similar to the other trade, looks very similar to the EXPD. We can make the decision. Do I want to get out of all of it with Holly, or maybe just do that first lot, take the 23 cents and hope to get more, and in this case, you were rewarded. And of course, if we look at the daily, where when we're short up here, what are our expectations? Well, things get really wacky. We could have came down here and tested these wicks. Things didn't get too crazy, but we still had a nice move down, as we can see on the intraday here. Never got down to these areas, but who knows? Depending on what the day is like tomorrow, this little guy may want to visit these lower wick areas. So those are a couple of risk on. I guess QURE would be a good example of a trade around, because this one did get stopped out, like a lot of shorts today. Right on the direction, but not on the timing. Holly gets short right here, and over the course of the next 15-30 minutes, we get the stop out here. Then takes a little cruise higher, even well above the stop area. So there's a couple of different ways that you can keep track of these guys. Just when you see Holly get stopped out, you can come back in here and set a price alert and say, you know what, if it comes back down through the stop area, I might want to take a peek at it and see if the risk is in place and maybe use that stop as an entry. Or as it comes back down through the price line or the entry line for the second time. You can see in both cases here, it would have turned out to be decent signals. This is also something that Dan was doing in addition to all of the other information that he was gleaning today when he was flipping these things, what used to be long into a short position, right? Pivoting off of the stops and the original entry levels. So in this case right here, after we took this little excursion, either the stop or the original entry, they would have been good entry signals here. And you know, some days Holly's executing risk off mode and she's saving us money on the stops. Sometimes she's leaving money on the table in the form of going risk on. Today, these things just seem to keep on going. Let's see here. I guess LPLA was a duplicate. We had a triple signal today on CVS. You can see all three AIs triggered the same trade here. CVS was another one that Holly decided to pull the plug on. And while this one never got back up to the stop, you know, this type of action in the first half of the day on the shorts is, you know, pretty textbook. A lot of charts were doing this. So CVS, even though the stop out did not occur, still had to sit some significant pain here. But look what happens when we come back down. Start dancing around on that line again, and you know, some pushes down and then a lower close. So that is the temperature for today. Shorts were not easy to hold, especially if you started piling into them early. But that's the way the market unfolded today. But seeing those extremely strong compare count readings definitely kept me in the chair and interested for most of the day. And it was not easy, but you know, the shorts eventually were rewarded today. And as we open up tomorrow, it's going to be very, very interesting to see if indeed tomorrow is the bounce day or we have more selling left. Okay, now showed you Dan's screenshot, showed you how he interacted with the software today. Now we just got a new version delivered to us that we all got installed. Hopefully everybody did. I got mine installed, and we've got a new function when we're using B+. Of course, this will also be a function of Holly as well when we do release her towards the end of January, hopefully. So what I've done here, and by the way, I had my Brokerage Plus firing all day. I had my interactive account set up in paper mode and had a lot more trades to show you guys here today, but lo and behold, I'm eating some lunch. I noticed that my IB crashed, so I had to reboot everything and get some trades on the blotter here for you guys to take a look at to show this functionality. But it was a pretty interesting day running the NR7s to the downside. In any case, those trades are gone for now, but I wanted to have something up here just to show you guys what's going on. Okay, so notice right here, I click on XPO, which was up about $7.29 going into the close. So I had to generate these trades post-market because all of my regular market trades got disconnected, but it's the same song and dance here. So feast your eyes on the post-market area here, the blue area, all right? Shorted the stock right here shortly after the close. And what do we have here? We've got a blue line and a red line. Now, the red line is my stop loss. And the way I had this, let's see here, strategies. Okay, so I just threw this guy together. We can see my trading instructions. I simply said, okay, for the stop loss, let's use $1. For the profit target, let's use $2, just for something simple. And that's what these lines represent right here. This is my stop loss line. So in the future, instead of having to go to the, you know, your active orders window MB Plus or your trading platform, which in this case would be IB, since that's the only one we're connecting to right now, and fiddle with all the numbers and the order interface and canceling or whatever. Changing a stop loss or a profit target is going to be as simple as grabbing the red line. I want to move my stop down to here, protect that profit. All we got to do is this right here. Well, put that guy right there. Message pops up. Okay, your stop order is going to be changed. No more fiddling with the numbers, no more fiddling with the interface. You just grab this guy and drag it around, and boom, it's going to adjust those stops and profit targets for you guys. So this is the drag around stop loss and profit target functionality that's been talked about for quite a while. Now we're testing it, so hopefully it's going to be rolled out pretty soon. So this once again changes the landscape of trading. More visceral. Less poking around with inefficient conduits and changing prices and making mistakes and all that good stuff, because hey, when all you gotta do is pull up the chart, drag the thing, makes your life a lot easier. Let's see another one here. Why? That was an old one. CRM, stop loss here. Of course, that one got triggered. So, once again, just dragging this thing around changes all the numbers for us. It saves us time and really kind of changes the game completely when we can just stick to the visual charts and drag this thing around, whether it's a stop loss or a profit target. So that's what's coming down the hopper, ladies and gentlemen, for Brokerage Plus and Holly. And I would be remiss if we just didn't kind of visit some of the simpler setups. We've been talking about AI, how to interact with it, how to extract additional information out of it, other than what we can see here. Using the analogy of, I had 14 longs on the blotter, and when we got that move up, nothing happened. We can take away from that. We can couple it with our compare count readings or any other metrics that we've, built into our methodology to try to make the best decision. But if you've read the ebook, then what I'm about to show you should look familiar. If you have not read the ebook, we're going to show you how to get it on the way out, so fear not. But those of you who have read the ebook and have heard me, showcase setups before, I'm a pretty simple guy. So we're going to talk about the turbo breaks down, no resistance, which was spitting out some pretty good plays today. And you can grab this multi-strategy window from channel 4, which is the place to grab all mine, Steve, Andy, and Sean's favorite setups. So without further ado, let's talk about some of the good ones that came from turbo breaks down, no support. Now, this little guy right here, MRCC, textbook setup, a little bear flaggy type action here. We get the move down, we get this nice tight consolidation here. And of course, right about 11:39 my time, which is the window right here, I'm clicking on it, you can see the nice clean intraday signal. That is the range break. So we get new low right here with exceptional high volume on the 1 minute and relative volume time frames. We can make a nice clean entry here. Looking back up at the prior 15-minute candle is our potential stop loss, in which case never was even flirted with here. Another thing to point out, and Steve would like this, is that 10-period moving average. It's just keeping it tapped down, nice and snug. So entry here, reward area here, considerably a bit beefier than our risk area, which is right here. So added benefit. Months ago, we were used to seeing these things break to the upside with no resistance. Now we're starting to see the exact opposite, and more of these guys show up. Notice this pattern repeats itself on the daily. We look for it here as a nice snuggly entry. Of course, we always want to have a little bit of room. If it's range bound, we size it up, but in this case, it's in the hole or in the abyss. No apparent support to catch it. So you never know how much you're going to get out of these guys. But especially if you're an overnight holder, not a bad attribute to have, but especially on the intraday, when we make this clean break, and we start to get in the money, we know that this thing does have some room underneath because there's nothing there to cushion its fall. So MRCC was a textbook example. Now keep in mind, we see it coming across down here, timing's off, too late. This is the cherry opportunistic time. Same pattern in GOV today. Government Properties Income Trust. Boy, what a name. But as we can see here, nice little tight consolidation area. Slowly but surely, we have to include the wick, play by the rules, because this cannot be a new low until the range is broken here. So we have to include the wick. But once again, same old song and dance. And guys, ladies, gentlemen, these setups were out there all day. With the ones I'm showing you, I'm just barely scratching the surface. But once again, the simplicity. We make the short trade right here. Prior high of the high of the prior 15-minute candle. Nice tight risk area, and a nice beefy reward area once again. And of course, I'm sorry, I keep saying of course, seems to be my pet word today. But the bottom line is the simplicity of the pattern. The nice clean break, the low risk, and what do we have here once again? The 10-period SMA. It never even acted like it was going to get back up there, tapping it down once it catches up, even a tapping down further. And the added benefit, this little guy seems to be heading into the abyss and nothing to cushion his fall. More of the same, TCRD. Just, you could level a house with this. And when you're playing the range break game, these are the ones that you want to see right out of the textbook. Even lower risk on this guy, probably the tiniest risk of all of these trades. High the prior 15-minute candle. We get short right here and just literally off to the races. So once again, it's all about timing. This guy wasn't that busy today. The break down with no support, very manageable, right? Not everything that's coming through here was setting up properly, but when you see these, they just pretty much jump out at us. Let's see, we had another good one through here as well. Let's see, there we go. All right, CGBD. Oh, we got more of the same here. This guy's going on a downside adventure. But how can we, looking at a chart like this, wow, look at those consecutive down days. Who would want to short it, on the, I'm not even going to bother to count those up, but this is where we take solace right here. We're like, hey, here's the pattern again. This one not taking as long to develop. Downward action, a little flagging sideways action. Boom, we get the pop here. We know that our risk, even though that this guy looks awful scary and we think to ourselves, so much energy expenditure, this thing might be getting ready to bounce. But our downside is limited by this little guy right here. Hey, if we're wrong, we'll take our lumps and move on, even though this looks kind of scary. All we care about is this right here, right? If it goes up and pinches the high of the prior 15-minute candle, we'll gladly take our lumps and move on. That did not happen here. So once again, we get a nice clean entry with minimal risk right here. And look how nice and juicy the reward area was right here. And that's what we want. 2 times, 3 times, even bigger on the risk to reward. And hey, what do we got here? Once again, that 10 period, just, keeping it nice and tapped down. If you ever do see a close above that 10 period, that would also be a good time to go, okay, thank you. I think I'm done for now. So these were all the ones that were basically in the hole with nothing to catch them. Let's see, what was my other one? I don't think NTNX. Yeah, okay. This is an example of one that is not in the hole, right? See, we're range bound right here, but the entry is the same, the pattern is the same, and we would look to the daily to try to figure out, okay, we see a nice clean entry here. This one took a little bit longer. Well, actually, I think I threw my time off there. Let's see here. Nope. Yeah, so never mind. My eyes are playing tricks on me. We barely had a pinch through here with the high volume. I didn't have my line snuggled up to that wick exactly. But this was the break to the low. This one took a little bit longer, about 45 minutes before it, decided it was going to take its next leg down. But once again, using the high of the prior 15-minute candle, so we had to wait a little bit longer. Okay, that's fine. Still get a nice move down. So the thing I like about these, especially if you're new, is the simplicity of the trade, the low risk, and the fact that it's kind of hard to mess these up unless you're chasing, right? Timing is everything on these guys, so we want to get the entry as soon as that low is broken, and we want to have minimal energy expenditure in the prior 15-minute candle so that we do have a tight risk. And that's pretty much it. And like I said, these are the ones that I'm showcasing, but there were probably who knows how many of these out there today. And if you're patient and look for them, then you will find them right out of the ebook that we put together. So I think I've gotten just about everything covered today. Any questions before I let Scott walk us out here? Go ahead and throw them out there. Otherwise, looks like everybody's had their questions answered by Steve, and the questions flow is a little light today. But what I would just say tomorrow to everybody is keep it nimble, keep it light. If you're uncertain what to do, then doing nothing is a form of action until things line up and become a little clearer. So, pivoting into some interesting times in the market over the next couple of days. And want to thank all of you guys for attending all of the webinars since this is the last office hours. Then enjoy the holidays, and we'll see you guys back online when everybody is back from all the excitement of the holidays and gift giving and New Year's and all that good stuff. Well, Scott, if you're ready for us.
Yeah, pull that.
We're ready for you.
Slide up. So, to get Brokerage Plus in January, if you don't already have access to it, you need to make a reservation. So you can make a deposit, and then we'll charge the rest when we do the release. The total cost is $1,100. So go to trade-ideas.com/brokerage plus and put in your $100 deposit, and that guarantees you a place in January for the release. The official release of Brokerage Plus. It's coming out of beta officially then, and then we will be adding AI to it at some point in the first quarter, most likely. Again, trade-ideas.com/brokerage plus for all the details. There's an FAQ there. Find out about it. There's also a link to get a free paper trading account right there from IB, so you can go ahead and practice using it. There's an ebook very timely for this year. Both Jamie and Steve contributed chapters. Trade-ideas.com/ebook. Go there, put in your email address to get download a link, and keep that handy. It's got 5 strategies for winning in a crazy market like we're experiencing. We've got a podcast. There was a new episode out last Friday. That was the actual last episode of the year. However, subscribe to Trade Ideas Podcast now because we have a special guest episode coming up this coming Friday to close out the year, and then you'll be ready to get all the fresh new pods in 2019. So search for Trade Ideas Podcast wherever you listen to pods and subscribe. We have a promo code today for those of you that want to do an upgrade to premium or start a Trade Ideas subscription. Just use Holly Berry, all caps, either when you're doing your checkout or during an upgrade. And that saves 15% off the first month or year of your new subscription or your upgrade. You can email info@trade-ideas.com with any of your questions. You can follow Jamie on Twitter @QuantBot. Steve is @TodayTrader. So go ahead and do that. And then find our Facebook page. It's Trade Ideas Pro on Facebook, and like it. That way you can get updates there too and share them with your friends. Thanks, everyone. Thanks, Jamie and Steve. We'll have a recording up later on tonight or tomorrow, and there's a few more webinars left this week before the webinars are done for the year. We don't have any webinars coming up next week. That's going to go quiet. Actually, I think we're actually resuming. I'll talk with the boys about it tomorrow, but I think we're not resuming until after the New Year starts. But we'll let you know. You get an email update with all the details. We'll have the recording up later on tonight or tomorrow morning, and thanks all. Later on.
Thanks, everybody.
See you tomorrow.
See you later. Bye-bye.